Hello guys, welcome to my YouTube channel. And if this is your first time here, please go and subscribe to my channel, turn on the notifications so that you can always get access to videos firsthand when I release them. All right, so today I want to quickly demystify the concept of time frame correlation and market structure. This is one concept in Forex trading that a lot of people can't really put together. They can't really relate them together and they get confused about it. They know the concept of market structure. Of course, market structure gives the general bias of the market, and we have majorly two types of market structure. We have three types of market structure, but the last one, which is the consolidation, I'm not going to be talking about that one. We've dealt with that in some other videos. That's range markets. We're going to talk about uptrend market structure and downtrend market structure. Of course, we know that uptrend market structure is when price or market forms series of higher highs and higher lows. Series of higher highs and higher lows. So when price is forming something like this, we say it is in an uptrend market structure. That is, every new high is higher than the previous high and every new low is higher than the previous low. So we say price is forming higher highs and higher lows. And of course, for a downtrend market structure, this is when price forms series of lower highs and lower lows. Lower highs and lower lows simply means that every new high is lower than the previous high and every new low is lower than the previous low. So as long as price keeps moving this way, we say it is in a downtrend. And for the first one, as long as price keeps moving this way, we say price is in an uptrend. And of course, it gets to a point in time where structure changes. That is for an upward trend market structure turning into a downward trend market structure, or a downward trend market structure turning into an upward trend market structure. And of course, for an upward trend market structure, the lows sustain the trend. The lows sustain the trend. That simply means that structure will still be maintained as long as the last significant low is not yet cleared. But let's say, for example, if we have, for an upward trend, if we have a new low that is lower than this previous low, then we'll say this is a break of structure. Then we say this is a break of structure. So of course, we now want to change our bias to a bearish bias so that we can now start forming lower highs and lower lows. So for an uptrend, the lows sustain the trend. Why for a downtrend, the highs sustains the trend. So as long as the last significant high is not broken, we still say price is maintaining, or price will be maintaining a downtrend market structure. So I believe that is clear. Now, one basic thing that confuses people is that they don't know how to link the structures of one time frame to another time frame, because there are sometimes that the bearish structure, a daily structure can be bullish, and the 1 hour structure is bearish, and people get confused. So if you don't know how to properly link structures together, then you will have problem to even be able to locate where to buy or where to sell. And that is what I just quickly want to demystify in this video, so you know what's up. All right, so let me introduce some diagrams here, and let me just give you the proper representation of structure. So let's say have this to form higher high, higher low, higher high, higher low. Let's keep that like this. So let's say this black line, let's just say this black line represent my daily structure. For example, let's say this represents my daily structure. So that means from what we can see, we can simply say that, let me make this 3. We can simply say that the daily is bullish. So let's say the black line represents daily structure. When I mean daily structure, I mean day, D. So the black line represents daily structure. So that means with respect to what we have on the daily, we'll say structure is bullish. Say it is bullish on the daily. So that means this is the first impulsive leg. This is the retracement of this impulsive leg. This is the next impulsive leg. This is the retracement of this impulsive leg. This is the next impulsive leg, and so on and so forth. So as long as we maintain this on the daily, we'll say the daily is bullish. Now let's come down to a more lower time frame. Let's say we come down to 15 minutes. So this impulsive move on the daily will actually be an uptrend in a significant lower time frame. Let's say, for example, 15 minutes. So let's say this is 15 minutes. So that means I have something like this. I have high, low, high, low, high, low, high, break, low, high, low, high, low, break. So I believe you understand what I'm trying to do here, and don't worry, I'm going to explain. So I'm going to reduce this to be, let's say 1 pixel, let's say 2 pixel, and let me change the color. Let me change the color to be red. So let's say red represents 15 minutes. Red represents 15 minute structure. 15 minute structure. All right, so red represents 15 minute structure. Now, if you look at it very well, you discover that the impulsive move of day, just this impulsive leg of day, is an uptrend for 15 minutes. Can we see that 15 minutes was forming high, low, higher high, higher low, higher high, higher low, higher high, lower low. So that means at this point, there was a break of structure for 15 minutes. At this point, there was a break of structure for 15 minutes. At this point, there was a break of structure for 15 minutes. So immediately 15 minutes broke structure. That would be a confirmation that, oh, the retracement of day wants to start. So that means once 15 minutes break structure, that simply means that we'll now wait for a premium price for us to actually take a sell and now target lower target and now target lower. So of course, this 15 minutes that will now be in a downtrend is just the retracement of the daily. It's just the retracement of the daily. So that means it comes to a point where the downtrend of the 15 minutes will be exhausted, and that is when we'll have a break of structure and we'll now continue the next impulsive move. So if you understand time frame correlation, you will know when to enter a trade and when to actually exit a trade. You can imagine for a 15-minute trade, you can imagine you enter a sell here. You can imagine you enter a sell here, for example. You can imagine you enter a sell here on the 15 minutes, and you are probably targeting this low right here. You're probably targeting this low right here. Whereas you have not checked the bigger picture to know that, oh, this downtrend of the 15 minutes is just a retracement of the day, and price will still break structure to continue the next impulsive move. So you want to be very careful. You want to ensure that you always check your higher time frame to know what your higher time frame is saying. So at the end of the downtrend of this 15 minutes, once we see a break of structure from a significant higher time frame zone, once we see a break of structure to the upside, that means we are prepared for the next impulsive move. So once you are able to catch a buy here, that means you want to target, with respect to your higher time frame, you want to target minimum of this high first. You want to target minimum of this high first. Why? Because your higher time frame is bullish. So that means that since we have started the next impulsive leg, we are heading to clear this high. So we want to set our target based on the daily because we caught a very nice move. I hope you are getting what I'm saying. So you need to be able to know how to correlate time frames together. So at every turning point of the daily time frame, you can see that the 1 hour break the 15 minutes break structure. You can see here too the 15 minutes break structure, and I'm traded downward, broke structure, and traded upward, and so on and so forth. And similarly, if you go to a much lower time frame than 15 minutes, the impulsive move of 15 minutes is actually an uptrend for, like, let's say maybe a 1 minute time frame. I can say this is actually a 1 minute time frame, forming high, low, high, low, high, break of structure, traded downward, break of structure, low, high, low, high, break of structure, and so on. Let me just give it another color so you can probably understand what I'm trying to say. So you can see a more lower time frame. The purple, let's say the purple represents the purple color represents 1 minute. Represents 1 minute. 1 minute structure. The purple represents 1 minute structure. The purple represents 1 minute structure. So this simply means that, okay, let me even extend, for example, let me still extend this purple structure. Let's say we want to take a sell. We want to take a sell for this area right here. So let's say maybe our 1 minute is now an uptrend. Of course, we have seen that 15 minutes has broken structure here, and we now have 1 minute to be an uptrend in this 15 minutes retracement. Once there's a break of structure on the 1 minute here, this would be our confirmation on the 1 minute to take a sell. Then we can now move. So this is what we should expect around that area for the 1 minute. This is what we should expect around that area for the 1 minute. I think I should redo it. So for us to properly take a sell, because we highlight zones on the 1 hour or on the higher time frame, but we execute trade on the lower time frame. So this is a typical example of what you will see here on the lower time frame. So for what we have seen here, 15 minutes has broken structure. So this retracement of the 15 minutes up is an uptrend for like the 1 minute. So that means once we spot 1 minute break structure in this bullish run, once we spot 1 minute break structure, then that becomes our change of character for us to now take a trade and start trending downward. So that means this is the most appropriate place to take the sell. So we can see that we're able to relate the trend of daily to 15 minutes down to 1 minute to be able to execute the trade. And of course, in this same video, I'm going to tell you the importance or the purpose of higher time frame and the purpose of lower time frame. So once you are able to link time frame together, then you don't have a problem. You don't have a problem. Once you're able to link time frame together, you don't have a problem. You know exactly when to enter a trade. You know exactly when the turning point has occurred. You know exactly when to exit a trade. Now, the black line I said initially represents the daily structure. This could actually be that. Okay, let me see. The daily structure here breaks this and retraces. I'm trying to give a particular illustration. So let's say this is the daily. Let me change it to 3 and change it to black. So for what we can see here, we'll say the daily has broken structure right here. So if you don't understand your higher time frame, you might not even be able to swing or be able to know exactly when to take a trade. So from what I told you about structure, this simply means that the daily has actually broken structure. So that simply means that the next buy we experience from here is a retracement of this impulsive leg, so we can now continue downward. So we can see the difference between the macro structure of the market and the micro structure of the market. Now, may I now give you the last shocker? That fine, from what we have here, it seems as if the daily is now bearish. May I now give you a shocker? That the fact that we have here that daily has broken structure, this could actually be that on a much more higher time frame, the whole of this upward move of the daily, for example, let's maybe monthly or 2 months, the whole of this uptrend of the daily is actually an impulsive move of a more higher time frame. For example, let's say maybe monthly or 2 months. And this move that seems to have broken structure is just a retracement of that higher time frame, 2 months. And of course, we're now having the next impulsive leg to form a higher high. Just like that. Let me change the color of this one. Let me make it 4. Let me make the color, let me make it yellow. So yellow could actually be the monthly. Yellow could actually be, let's say 2 months. Let's say 2 months. So the question is, what high are you using to look the market? How well have you checked the macro structure of the market, then streamline it down to the microstructure? So this move of the daily, you might think it wants to go very far, whereas it's just a retracement of a much higher time frame and it wants to continue higher. So this is how well you can relate time frame together, or relate structures of different time frames together, and you know exactly when to buy and exactly when to sell. Any trader that knows how to properly relate the structures of different time frames together is a successful trader. Now, let me just briefly give you the purpose of higher time frame structure and the purpose of lower time frame structure. All right, guys, this is the essence of higher time frame structure and also the essence of lower time frame structure. The major essence of higher time frame structure is trend direction. The reason why we go to the higher time frame, like in our top-down analysis, the reason why we go to the higher time frame is to get the general direction or the general move of the market. So let's say maybe you just started an impulsive move of a higher time frame. That simply means that you are going to be bullish oriented, like you're going to be looking for more buys than sales in the long run. So the essence of higher time frame is to provide the general direction of the market. Like what I said higher time frame gives the general bias of the market. Then secondly, key levels and special zones, that is demand and supply. My demand is wrongly spelled, okay? So demand and supply. So our higher time frame gives us valid demand and supply that pushes price to the upside or to the downside. Focus for demand to the upside and for supply to the downside. So it is from higher time frame that we get key levels and key zones for our buy and sell. It is the higher time frame, and higher time frame is actually relative. For 1 hour compared to 30 seconds, 1 hour is an higher time frame. Daily compared to 1 hour or 15 minutes or 5 minutes, daily is an higher time frame. So that means you can actually get a structure on the 1 hour and come to like the 30 seconds to initiate a trade, or you can get a structure on the daily, streamline it down to 1 hour, link it down to 15 minutes, and eventually maybe take your trade in 3 minutes and so on. But higher time frame zones are better and stronger than lower time frame zones. So you want to look out for zones that will present buy and sell opportunity for you on the higher time frame, and then now streamline it down to the lower time frame to take it. So these are the two major essence or purpose of the higher time frame. Now, what is the essence of the lower time frame? Of course, the essence of the number one essence of the lower time frame is to give us confirmations. Confirmations. So the major essence of the number one major essence of the lower time frame is to give us confirmations that we align with higher time frame bias. From what I showed us in the schematic just now, At points where we have change of character, it is the lower time frame that presents us a change of character to make us know that lower time frame is now ready to align with the higher time frame. And this is one of the reasons why we go down to lower time frame to take trades, which leads us to our number 2 point of the purpose of lower time frame, to present early entries of major moves. So for major turning points or major zones, or the moves from major zones on a higher time frame, actually starts from the lower time frame. So that is why we do our top-down analysis to know the general bias of the market on the higher time frame, then go down to a lower time frame to get an entry. Then the third essence of lower time frame, which is linked to the first two, is to minimize risk by giving good risk to reward. So it helps us to minimize risk, and by giving us good risk to reward. You can imagine you having a zone on higher time frame, and if you are to take that trade based on the higher time frame zone, maybe demand and supply, you might be having close to maybe 50, 60 or 70 pips stop loss. But if you streamline those trades down to a more lower, if you correlate the structures of the time, if you correlate structures with the different time frames, you discover that when you come down to a more lower time frame, your risk will be minute. You might be having things like 2 pips stop loss or 3 pips stop loss. Then important notes, higher time frame structures are stronger than lower time frame structures. So before you take any long buy or sell, or take any buy or sell at all, ensure you have done your top-down analysis. Then number 2 keynote is that lower time frame structures must always align to correlate with higher time frame structures. Lower time frame structures must always align to correlate with higher time frame structures. With higher time frame structures. Lower time frame structures must always align to correlate with higher time frame structures. The third keynote is that data from higher time frames data from lower time frame form the higher time frame structures. So that simply means that, fine, the higher time frame structures gives us the general bias of the market, but the coming together of different time frame data is what forms the higher time frame bias that we have seen, or that we have assumed in the first instance. Then the last point is that higher time frame move starts from the lower time frame change of characters on higher time frame zones. So that simply means that for a move to occur on the higher time frame on an higher time frame zone, it must have started from a lower time frame change of character. So I want you to watch this video over and over again, and still keep up with some of the videos that I have released before on my channel and that I will still release, so that you can see how well I correlate time together in my top-down analysis. And I want to believe that this video has done a little justice to time frame correlation and structures. All right, guys, so thank you very much for watching this video. If you haven't subscribed to my channel yet, ensure you click the subscribe button, turn on the notifications so that you can always get posts first and when I release them. And make sure you share, ensure you comment in the comment section, and be profitable. Thank you very much. I remain Mr. Pig FX.